Did you ever wonder why governments, the same ones that once warned us about crypto, are now quietly investing in it? With inflation rising, money being printed like crazy, and global prices going up, some countries are now turning to Bitcoin as a hedge. Let's break this down in simple terms. We're going to cover what governments usually invest in, what inflation and tariffs have to do with it, and how crypto, and especially Bitcoin, might be their secret weapon. So first, let's talk about how governments invest. Now, they don't invest like individuals. No meme stocks or chasing quick flips. Instead, they manage reserves and sovereign wealth to keep their economies stable. Here's what they usually invest in: foreign currency reserves, like holding billions in US dollars, euros, yen, to help trade and stabilize their own currency. Government bonds. These are like IOUs that earn small, steady returns, safe and boring. Gold. The old school store of value that holds up during financial crises. Sovereign wealth funds, SWFs. Now, this is where it gets interesting. These are huge investment portfolios run by countries like Norway, the UAE, and Saudi Arabia. They invest in everything from stocks, real estate, energy, to tech companies and infrastructure. In short, governments build big safety nets and they spread that money across different buckets to protect their people and economy. Now, here comes the problem: inflation. When governments print too much money, prices go up. Your money buys less. Basic stuff like food, fuel, electronics, everything becomes more expensive. Why does this happen? Because printing more money increases the supply without increasing the value. Too many dollars chasing too few goods equals prices rise. And when inflation hits, people suffer. Savings lose value, salaries don't keep up, businesses struggle. So what do governments often do to respond? They add tariffs, taxes on imported goods to protect local industries. But here's the twist: tariffs often make things even more expensive for regular people. Let's say you import rice from another country and the government adds a 20% tariff. That rice now costs more and the shop has to raise prices. So now the poor and middle class are hit even harder. So governments are stuck in a loop. Print money, cause inflation, raise tariffs, make life more expensive. And this is where crypto starts to look attractive. Now imagine you're a government and you're watching your currency lose value. You've printed too much money, inflation is up, people are complaining. How do you protect your national wealth? One answer: Bitcoin. Here's why. Bitcoin has a fixed supply. Only 21 million will ever exist. It's decentralized, no government controls it, it's global. You can send it across borders without needing banks or middlemen. In short, it's like digital gold. Just like countries buy gold to protect their reserves, some are now considering or already buying Bitcoin. Example: El Salvador made Bitcoin legal tender in 2021. They started buying it and even launched Bitcoin-backed bonds. Their president literally tweeted, "We're buying the dip." At first, people laughed. But over time, other countries started watching closely. Now, Argentina, Nigeria, and even Russia have shown interest in using crypto to trade store value, akatasing, or bypass the global banking system. Even big hedge fund managers like Ray Dalio and BlackRock's CEO now admit that Bitcoin may have a role in the financial system. Governments can approach crypto in three main ways: buying and holding Bitcoin or crypto assets. Like holding gold, some are adding small percentages of crypto to their reserves to hedge against inflation or political instability, launching their own digital currency, CBDCs. This is not the same as Bitcoin. A central bank digital currency is a digital version of a national currency, like a digital dollar or digital euro, controlled by the government. China is leading this. Their digital yuan is already being used in cities using crypto for international trade. Some countries, especially those under sanctions, are exploring crypto to pay for imports or exports without using US dollars or SWIFT. For example, Russia and Iran are talking about using stable coins for oil and gas payments. And while most governments aren't rushing to go full crypto, they're definitely watching, testing, and preparing for a more digital financial future. So, what's the big picture? Governments are realizing that traditional finance is changing. Inflation, tariffs, money printing, they've created problems that crypto might help solve. Bitcoin isn't just an experiment anymore. It's becoming a potential tool for national strategy. The big question now is, if governments are investing in crypto, shouldn't you at least understand it too?